Stop buying single stocks. Stop trying to beat the market. If you're still researching daily price movements to build your wealth, you are losing to the system. The average retail investor always loses in the long run, and we are here to change that statistic for you. We at Invexia are not interested in speculation. We are interested in systematic, proven, long-term wealth architecture. Today, we dismantle the myth of complex trading and hand you the unbeatable ETF Blueprint, the only strategy you need to leverage the world's largest economies passively. In the next minutes, we will show you exactly how to structure your capital to work while you sleep, without needing a finance degree. But first, understand this fundamental truth. Mandatory Framework Notice. Before we proceed, it is essential to note, we at Invexia are not licensed financial advisors. This presentation is provided exclusively for educational and informational purposes. We do not offer personalized investment recommendations or trade advice. All investment carries risk. You must conduct your own thorough due diligence, DYOR, and consult an accredited professional before deploying capital. Now, let us examine the blueprint. Paradigm shift. Why shift focus from individual stocks to exchange-traded funds? The answer lies in risk management and efficiency. When you purchase an individual stock, you are betting on one management team, one product pipeline, and one set of regulatory outcomes. This is known as idiosyncratic risk inherent to a single entity. An ETF fundamentally eliminates this through instant, institutional-grade diversification. By acquiring one unit of a broad market ETF, we instantly gain exposure to hundreds, sometimes thousands, of the world's most resilient companies. Furthermore, we prioritize efficiency. The best long-term strategies harness the power of low-cost index funds /ETFs. We look for ultra-low expense ratios, the management fee. A fee of just 0.5% might sound small, but over 30 years, it can erode tens of thousands of dollars from your final portfolio value. Our focus is on minimizing costs to maximize compounding. Core Blueprint. The Invexia Blueprint is not complicated. It relies on two foundational pillars: broad market exposure and systematic investment. Pillar 1, the allocation strategy. We avoid chasing headlines. Instead, we allocate capital to ETFs that track major, established global benchmarks. For instance, an ETF tracking a developed market index provides exposure to stable, blue-chip performance. An ETF tracking an international, non-domestic index captures global growth outside your home market. The key is stability and reach, not speculation. Your primary portfolio ballast should be the market itself. Pillar 2, the discipline of dollar cost averaging, DCA. This is the engine of the blueprint. We never attempt to time the bottom. Timing the market is a fool's errand that even professionals fail at consistently. Instead, we implement dollar cost averaging, DCA. This means investing a fixed monetary amount on a fixed schedule, e.g., the first of every month, regardless of the current price. When prices are high, your fixed investment buys fewer shares. When volatility causes a drop, your fixed investment buys more shares at a discount. This systematic, emotionless approach naturally lowers your average cost per share over the long run. We are buying consistency, not lottery tickets. Psychology traps. Even with the perfect framework, human psychology is the greatest threat to wealth creation. We must build mental safeguards. The panic. Sell trap. Market corrections are inevitable. They are necessary for long-term growth. When you see a 15% drop, remember, your goal is to hold for decades. A momentary dip is simply a chance to buy more shares cheaply via your DCA plan. We do not panic, we adhere to the plan. The fee blind spot: always scrutinize the expense ratio. If an ETF charges significantly more than its benchmark counterpart for the exact same index tracking, we do not use it. Excess fees are an intentional drag on your performance. The over-optimization fallacy. Do not attempt to perfectly balance your portfolio every week. This creates unnecessary trades, incurs potential taxes, and invites emotional interference. We advocate for setting a target allocation, e.g., 70% global stock ETF, 30% international ETF, and rebalancing only once or twice a year, if necessary. The core ETF Blueprint strips away complexity. It empowers you to harness global economic growth through diversification, disciplined contribution, and minimized cost. This is the sustainable path to financial independence. If this professional framework has redefined how you view starting your investment journey, we ask that you validate the insight by hitting the like button. Your engagement helps Invexia reach more serious global investors. What is the single biggest hurdle you face in committing to a long-term strategy? Share your thoughts in the comments below. We read everyone. To continue receiving these optimized, actionable financial blueprints, ensure you subscribe to Invexia and turn on notifications. Thank you for investing your time with us. We will see you in the next analysis.